Good?
Wait a minute. Yeah, we're recording.
Okay, cool. So you guys, hey, it's Jess and London and Matt. We're gonna quickly just go over how to get your indicators set up, and I'll quickly cover the strategy. So at least by the time we go on our webinar, you guys will kind of have an idea of how this works, and maybe can do some testing. So firstly, you're gonna open your MT4 and you're gonna click this little folder with a star, which means it's your indicators. You'll click right here. Let me just click on indicators and you'll see trend. And you'll double click on the Ichimoku Kinko, it's like Hyo is the correct way to pronounce it or something like that. So just double click it. I set my lines to be thick and you'll see why when I add it on here. The parameters you want to keep just like this, okay? So you're going to have your Tenkan Sen line, your Kijun Sen, your Chikou Span. I'm not going to get into the whole technicalities of what each line is called because I literally just say blue, red, green, and that's it. But that's, leave everything as is and then just hit OK. So it's going to look a little funky right now, but that's what I use. The second thing I have is my RSI. And I just kind of like to make this a little bit thicker just for me because I'm blind. And where is it? For levels, I change this to black and I make this a little bit thicker so that I can see it instead of it being gray. I use something called reverse fractals, which for some reason a lot of people don't have. So for the recording, I'm not going to go over it, but Lyndon, when we're done, I want to stop the recording and show you this indicator that I have. Okay?
Awesome. Absolutely.
So that's it. When I do Ichimoku, I use the 1 hour, the 4 hour, and the daily chart. Okay, those are my, that's all I use. And of course, I'm going to zoom in a bit. So how this works is, this blue line right here is called your Kijun Sen, and this is pretty much what is considered like your stop loss. This is what we use for stop loss. Your red line is basically your price, okay? Like where you're at. This red line is going to determine, it's going to be one of the determining factors of if we're going to get into a buy or sell, okay? So these two lines, they are like critical to this whole process. Oh, this may be a good one. Hold on. Trying to look for a good one to show. This green line right here is your price, okay? And it's your price 26 periods ago. This is called the Chikou Span. Now the technicalities again about this, I'm not knowledgeable enough to go over what each one is. I just know how to make them work. So if you want to learn that, go back to those YouTube videos that Vinny provided and you can learn that stuff. So basically what happens is that how this works is you go ahead, you look at a pair. I typically look on the 4 hour chart and the daily chart first. That's where I like to look, okay? This is gold, it's too volatile. Let me look for something else. Hold on. This is actually one that I've gotten into. So let me remove these. Let me remove these real quick. I don't know why I picked gold. And let me see. All right, so basically it's gonna look like this. It's very simple. This upper area, like this top area, let me take this off too. Above the cloud is buy, below the cloud is sell. These clouds serve as support and resistance, okay? It shows you what support and resistance is, all right? The point of the cloud is you want to make sure, like for example, if we were getting into a buy, all right, and I'm gonna use, let me see. Trying to find a good example. Let's use this little area right here, okay? This is better. Okay, this is perfect actually right here. So what this means is the first thing we're going to look for is what's called the TK crossover. And a TK crossover is when the red and the blue line cross. So your Tenkan Sen and your Kijun Sen or whatever they're called, okay? When that happens right here, that's letting you know that a reversal is most likely going to happen, okay? So what you want to do is keep an eye out on the chart, obviously, and look for it to break through the cloud. Now, it took a little bit, like we had a little bit right here, and then it went back in the cloud, but then it crossed over again. And as you can see, we had a really strong sale. So whenever this happens, you want to look and make sure that it goes in the direction that you're anticipating and breaks through the cloud. Like you see right here, they crossed. Did you see my mouse?
Yeah.
You see right here, they cross.
Mm-hmm.
That's letting us know that a reversal is going to happen, okay? And what happened? It reversed. It broke through the cloud, okay? It broke through the cloud. And that right there are your 2 confirmations. There's going to be 4 confirmations, but those are your 2 confirmations. So same thing here. It crossed over. It went through the cloud. And as you can see, like how many pips was that? Hold on. It's a good 100, what? 150 pips.
Amazing.
Yeah, it's awesome. So those are the first 2 confirmations. The third and fourth confirmation is once it breaks the cloud, wherever it's at, like wherever price is at, you need to look 26 periods behind and 26 periods in advance. So the cloud shows you in advance, like this little cloud right here would already be here. It lets you know where the market is going. And as you can see, the candles mirrored this exact cloud. You see it? Like it mirrored it to a T. Okay, the cloud shows you this in advance. It shows you where the trade is going. It's great for people like me that have the worst anxiety ever. So you wait for it to break the cloud, you go to your candle, you want to go 26 periods to the right, and the question is, at 26 periods, did we have a Kumo twist, a Kumo twist, and that's this thing right here.
So explain the 26 periods for people. So 26 periods means
26 periods to the right, you want to look for what's called a Kumo twist, which means it's changing from a sale to a buy or a buy to a sale. You see right here, this is a twist. This is a twist. The change in colors, pretty much. Okay? This right here, this is a twist. See the change from sell to buy. And my computer, this color is sell, this orangey tanny color is a buy. So, hold on 1 second. Give me a second, okay?
Mm-hmm.
Sorry. You may have to pause this.
Oh, yeah, I can hit pause. Okay, we're back.
All right, sorry. So this is a Kumo twist. This is your third confirmation. So number 1 is the TK crossover, which means that a crossover is happening, which is a sign that a reversal is going to happen. But you want to make sure it's not like just a pullback. So what we do is we wait for it to break the cloud for second confirmation that it is going to be moving in the trend that we anticipated. Okay, so in this case, in the uptrend. Then we look at the candle that we want to get in on. Let's say we didn't notice it until this candle right here, okay? Like, let's just say. You go to the right, 26 periods. Was there a twist? Now, for me, the twist would have just been created, okay? So I would have not gotten in yet. I probably would have waited until maybe this candle right here. Let me see. Yeah, okay. You see this candle right here? That little third one. I want to make sure a twist occurs. I don't want to be just like right here. I want to make sure there's a twist happening. Like I want to see the twist, and I want to see at least 1 bar, 2 bars that are like going in that direction. So we see a twist. Now we're going to go 26 periods to the left, which is the first number on the left, if everyone's asking. That first number on the left where you see 26, that's how you can tell. Now the question is price, since this is an uptrend, is it above previous structure? This is previous structure right here, okay? Clearly, price is above previous structure, right? That's your fourth confirmation to get in.
This is all very easy.
I know. Then you can use the RSI if you like, okay? I don't use this, but Vinny, she uses this. So this will kind of let you know if the market is overbought or oversold. So if it's above here, that means the market is overbought. Oh my God, I can't talk. So most likely it's going to go down and vice versa. So as you can see here, it's been overbought. Like everybody was buying and eventually we're going to expect it to go down, which is what happened. Like that's what this is telling you. I honestly have not used this. I can tell you what I do is I check these 4 confirmations. I check this on the 1 hour chart, the 4 hour chart, and the daily chart. So just on the 1 hour basis, if we would have gotten on this trade in the candle that I mentioned, which was right here, that was what, March 26th, and you would have waited, and one day by 8 o'clock in the morning, you would have gained 139 pips.
That's crazy.
Okay, now, but here's the deal. The next question is, when do I pull out? The way the guy teaches is that he pulls out when there's a crossover, because that means there's a reversing trend, okay? So if you were to have waited till you saw a crossover, you would have gained only about 70 pips. But that's 70 pips in a 1 hour chart. You see?
Okay. Yeah.
All right. So you never want to get in a trade when the crossover or when anything's happening in the cloud. You want to stay away from the cloud. The way I'm teaching you, the way that was taught to me, this is the strongest strength trade. If you get into a trade while it's in the cloud and it works, there's risk involved. Like it's a medium risk, they say. So I personally don't ever get into a trade when all this is going on in the cloud. Like to me, that's too much consolidation. Like I'm not going to get in there. Okay. But like, look at here. You had a crossover. You waited for it to break the cloud. Now, some people they probably would have pulled out because they would have freaked out when they saw this. Was it 40 pips? But if they would have waited to this crossover, they would have gained 90 pips. Now, I would have not gone in here, and I'm going to tell you why. Although there's a crossover, 26 periods, when I go here to the left, price is not below previous structure. You see this? It's consolidation. So I would have not gotten into this trade right here. I would have waited.
Do you mean above or below? You said price is not below previous structure. You mean above or is it below?
No. It's a sale. So if it's a sale, you want it to be below previous structure. When it's a buy, you want it to be above previous structure. Okay. So we never enter a sell on the top of the cloud. You never do that. You never enter a buy on the bottom of the cloud. This is buy territory, sell territory. So like I would have not gone into this because 26 periods prior, price is still the same. It's not letting me know that for sure it's going to go down. Like I'm not seeing a downtrend right now. So I would have not gotten in. I would have gotten in when I saw this little crossover right here. I would have checked the candle, 26 periods. Let's see. Was there a twist? There was a little twist. I don't know if you see the little twist right here. So a twist did occur. 26, I'm sorry. Excuse me, this way. 26 periods, yes, a twist did occur. 26 periods to the left is price below previous structure. So right here, this pricing is below this structure. So you get in, and a twist occurred right at this candle. So you technically have a twist within 26 periods.
And you don't have to wait for it to break the cloud because it's already under the cloud?
It's already under the cloud, exactly. So you normally get out of the trade, the way the guy teaches it, when the crossover happens, because that means a reversal is going to happen. And as you can see, that's exactly what occurred. So you would get out of the trade when that crossover occurs. And obviously you would move your stop loss. So let's talk about stop loss.
Well, one second, before you move on to stop loss. I've understood everything so far except for this whole price being above or below the structure, that green line.
Okay.
Just feel a little shaky on that part.
I don't even use the green line. I'm gonna tell you right now. I don't even use the green line. What I do is, I wish I had I can use a triangle, right? Here we go. Bam. Okay. So if I would have gotten in on let's say just this candle right here, okay? Drag to the left. Is price below the previous structure, 26 periods. That blue area is structure. Excuse me. Right? Is price below previous price. Does that make more sense?
Yes.
Okay. Is price below previous price?
Yeah.
It is. So that means it's safe. If it would have been in the same area, let's just say it would have been in the same area or close in the same area, you don't get into the trade because that's pretty much just consolidation. you don't get into the trade. You want it to be below this to show that it's in a downtrend. Look, this low is lower than this low. This low is lower than this low. You know what I'm saying? Like this low, that's what you want. You want that. So that's what you're looking for. When we got into the trade, we see that, you know, I keep grabbing a different candle, I'm sorry. But this 26 periods, there's no price here. There's nothing. There's nothing. It's empty.
Gotcha.
We're below this blue structure.
Okay.
Same thing with this buy right here, which I tend to get into a lot of buys with this method. I'll be honest with you. So we get in here, 26 periods. There's a twist, 26 periods here. Right here, okay? You see right here?
Mm-hmm.
This is the structure 26 periods prior.
Okay.
You see what I'm saying? So like, are we above that? Yeah, we're above that, which means that we're in an uptrend. We're moving up, which means a buy is looking like a good move right now. If it would have been in the same area as this, you would not want to get into it, but it's not. It broke the cloud. It's above the price. We see an uptrend. You can get into the trade.
Okay.
And the ideal location to get into the trade is when it breaks the cloud. Okay, this is your ideal location to get in. If you get in here, you risk a couple things. Like for example, I got into one late. I don't know where it's at. Is it? This may not be the trade. I've been analyzing so many charts. I don't recommend anybody does this. Okay, never mind.
I was just about to ask about that. So what's your guidance on too many charts? Would you say just pick a pair, or?
I would pick a few just to analyze. I don't think so. Maybe look at the door. Sorry. I will look at a few just to analyze and see, but I wouldn't do too many.
Have you noticed any pairs that are very consistent as far as these rules, or just everything? Okay.
Swiss franc. The Swiss franc, the CHF. Those pairs have been really good for me. So like
they're all CHF pairs, like Euro CHF and
yeah. Look. They're all in a buy motion right now if you look at the daily, okay? But if I was in the 4 hour, I don't like this one. Hold on. Let's see. Camera. Hold on, I'm sorry.
You want me to pause it or no?
No, it's okay. So you look at this one right here on the 4 hour chart, it's like going up. You see, like it's this trade isn't going anywhere. Like it's a buy. It's doing a lot of consolidation right now, but it's still in a buy motion. So I wouldn't get into it right now because I like to get in right when the cloud. Thank you. When the cloud. Sorry, I'm on mommy mode right now.
Oh, good.
I wouldn't get into it because it's already like up there. Here you go. Because it's okay. So like you see this right here. You see how it's mimicking the cloud. Like, look, this means there's a pullback. This is a pullback. This is a pullback. This is a pullback. It's telling you when a pullback is going to happen. Right now, it looks like it's just going to be a lot of consolidation in the same area, like right here. You're going to see a lot of movement right here. So if you wanted to jump in real quick, if you did, like where's price? Price is right here. I would probably do maybe 20 pips max. 10 pips would be obviously a guarantee, but there's a lot of consolidation going on, and the highest point's 35.
So right there where the red crossed the blue, you're saying it is safe for like a short term, a couple pips?
There's no twist yet. There's no twist.
Oh, there's no twist.
There's no twist. So a twist like right here, you see it's a lot of consolidation. And when it broke the cloud, you see right here, I'm going to show you an example where someone may have gotten psyched out. It broke the cloud, but if you look 26 periods back, it's in the same price structure. So you would not get into it. It's not above previous structure. It's in the same spot. So I would not get in on this cloud. Just because you see a cloud or a twist, it doesn't mean that it's safe to get in. You need to look at previous structure.
Okay, well, right there where your arrow is, what about, right there, what about when it crossed right there?
Oh yeah, so you go here, okay, let's go to this, let's see, where's the candle? We'll go here. 26 periods, we already had a twist, okay? So a twist occurred already and it's already in an uptrend, so it's safe.
Oh, so the twist doesn't have to occur after. So in this case, the twist occurred before it and it's still okay?
So this is you getting into a trade late.
Okay.
This is you getting into a trade late. Normally, I'm at a place where there's a twist forming and I'm waiting for a trend reversal.
Okay.
So if you, like, for example, you got into this trade and you want to go ahead and get into this real quick for some pips, or you see this right here, you know, you get in, you just check, it's still in an uptrend, the cloud's telling you it's in an uptrend, you go to that left and you can see, was it this one that we did? It's above previous structure, like that. This is previous structure.
Gotcha.
There's nothing in its way, so we know that it's in an uptrend, which if you would have took it up here, you would have got about 157 pips. Or if you took it to like cross, 104 pips.
Well, what about that first cross? Yeah, right there.
So about 23 pips.
Nice. Now, like if you're scary, you got some scared money, and you hopped in, and then it crossed right there to 23 pips, you would have hopped out.
Yeah, so that's why right now I'm telling everyone just 10 pips. You know what I'm saying? Because I think with 10 pips, everybody can just, not that I think, I know, you see me do it, like they can grow their account. They can grow their account and then really get into doing 20 pips, 25 pips, 30 pips. Like the way that Vinny does it, like she will just wait for a crossover because that's when it's time to get out. Like that's it. So like right here, I personally wouldn't touch this one. Like I wouldn't touch it only because it's probably going to go down. Like the twist is probably going to form once the candle's done.
Okay, different question though. So right where we had jumped in this example, right? If you didn't, I'm guessing where the second cross happens, you know, it was 25 pips, you could have jumped out, but if you look at the cloud, it's showing you that it's going to keep buying.
Yeah.
Wouldn't that be a indication to stay?
Yeah, and I look at the daily chart. The daily chart is very helpful for me, like super, super, super helpful. Because according to the daily chart, right here, okay, so you see this flat line? This lets you know consolidation is about to happen, which we already know. Like it's about to happen. We know this because the cloud is kind of just like, it's straight. You see this? The cloud straight on the 4 hour. The 1 hour, like it's going in and out of the cloud and we see a twist. So we know there's probably going to be an opportunity for a short-term sell right here because it's twisting, but it's a whole bunch of consolidation. I mean, look at it. You can see it right there. It's obvious. But on the daily, it's telling you it's still going to go up. So if you got into the trade now and you went in for about 10, 15 pips, you're going to win because the daily is showing that the next 26 periods, it's still going to be in an uptrend.
Gotcha.
So that's what I do. I can find something else. Another thing I do, which is very important. You know that investing app that I've been telling everyone, like the investing app that I have? I go on there, I get the pair, and I just see what they project. And like 99% of the time, what is projected by the cloud, it matches that app. And as you can see, I've been in the blue.
We need a training on the investing app next.
So like this right here, let me explain something important. A lot of people are going to ask what stop loss to use. I think I use like 30 pips, but the blue line is your first area of stop loss. This right here is a second stop loss, and this is a third stop loss. All right. I would never, ever use the bottom of the cloud because look at that. I mean, well, this is a daily chart. Hold on. So if we were in this right now, you're risking 75 pips. The lines are so close together right now, like it's just, you can't use that blue line right now. Like you can't use it. They're too close. Oops, excuse me. They're too close. Even if we measured, no. But if you try to do like around the cloud, it's about 20 pips. I do about 20 to 30 pips for my stop loss. And it does well. Like I accidentally clicked on a pair that I was in. Okay, so like this is one that I'm in right now where I'm doing exactly what I told you, where I got in late. Okay, I got in late. My risk is 25 pips, and I'm going for about 20.
Oh, okay.
So
When did you hop in this example?
not so long ago, like maybe about 35 minutes ago. Let me see.
Did you just hop in because the cloud is showing that it's going to keep buying?
It's well on the daily. Oh my goodness, it's still going up. Like it just broke out. It's still going up. It's looking good. It's in an uptrend. And on the 4 hour, it's looking good too. Like it's just, it's going up. It's not like this. It doesn't look like this area where there's consolidation. It's about to, like, it's just going to go up. So I know to get in there because it's going up. Like I've been doing this long enough to know that. However, I would not teach that to anybody. Like even though we're going over in the video, you'd have to do this a couple times to know that this is a safe place for you to get in.
Gotcha. Because as far as what we're learning, there was no crossover recently. So
yeah. So like, let's look at, okay, you see this right here? Nice one, really nice one. This is a 4 hour chart, all right?
Mm-hmm.
You see, like it broke the cloud, but one line is still in the cloud. I like when both lines are out of the cloud. So I would have got in around here. You see this? I would have looked to enter around here, not got in. So I would go here. We already know the twist happened. The twist happened, okay? The twist happened. We know it's in a downtrend. So at this point, I would just go 26 periods to the left. We are below the structure. We're below this. So that means we're continuing to go in a downtrend. There's already been a twist, so we already know that it's a downward motion. And if you would have gotten in there and you went to the twist, you would have gained 231 pips.
That is crazy.
Okay, so now look.
And what was that? We would have used the blue line or the first cloud line for a stop loss?
The blue line for your stop loss. So you obviously have to keep an eye out on it because you see right here, this just happened. That could have called you out of it. That could have pulled you out.
Well, we have still been in profit though, or no?
Yeah,
stop
no,
loss.
you'd be in profit if you got in. Like if you got in here. Well, no. Once you get in here, like this is 160 pips.
Oh yeah,
stop loss.
Yeah, sliding stop loss.
Yeah,
trailing stop. Yeah.
But even right here, let's say someone got in a little bit late right here. You know, they saw that twist is still in a downtrend. They could have gained 171 or 96 pips.
Crazy.
It's a 4 hour. This is a 4 hour chart. So, and literally, like, I put my trades in at night or sometimes in the day. Thank you. And like I wake up and they're in blue.
So you trade off the 4 hour? Like you like 4 hour as well?
I use the 4 hour the most. That's what I use the most. And what's cool about it is you don't have to really be looking at your computer all day. You see this little indicator I have that lets me know when the candle time is up. So in 53 minutes, a new candle will form and I'll just come back and check if I want. And then another 4 hour period will kick in. And then I just check back in 4 periods. So basically 53 minutes at 1 o'clock, I'm going to get an update on this trade, and then 4 hours later I just check to see where it's at, and then 4 hours after that I check where it's at.
When you say you're going to get an update, is that an indicator that like sends you an email or something, alerts you?
No, just on the candle. I'll see if it's going to break through or if it's just going to stay in the cloud. You see what I'm saying? Like, and
is that candle time? There's that candle time right there to the side. Is that an indicator?
It is, but I don't know if it's one that comes with the
Gotcha.
Yeah, I don't know. I can't tell you that. I just know I have it. Like, I don't know. Like I have things that people don't have, and it's really weird, but it's been a blessing, so I can't complain. So yeah, so that's just it. Like I can go and do another one just in case, because I know it kind of.
Wait a minute. Can we go back to that one that we were on the 4 hour one and look at the 1 hour to try to see the difference?
Damn it! Do you remember which one it was?
No.
Yeah, me either.
It was beautiful.
It was
a beautiful sale.
I've been doing right here. You see this from April 17th? Look at this. Look at this.
Amazing.
This is the one I've been working on right here. Now, one thing the guy teaches is that you don't want to get in on a big candlestick. Like you don't ever want to get in on a big candlestick because most likely news affected it.
Okay.
So he says not to get in on big candlesticks. I haven't checked news. I just don't. I listen to him. Like this big red candlestick, obviously I would not get into a sale because it's above the cloud. But if let's just say we were in a sell position, I would not get in on that because half the time it goes right back up.
Gotcha. Gotcha. So the blue line can be our first stop loss. If it's too close, we can go with the orange line of the cloud. And the last one is the bottom of the cloud, but that's a lot of loss.
That is a lot of loss.
Gotcha.
And if you're not taking a nice gain on it, there's no point in risking that much. Like I'm not risking 170 pips for 20 pips. That makes no sense.
Got it.
Yeah, but I don't know which is the one I was on though. Maybe, was it this one? I don't know, but this one looks good right here. So this is EG, right? You see there's like your little crossover just happened, right? If they break the cloud, we already have a twist in formation. You see it?
Oh, okay. Yeah.
We have a twist in formation, so the market's letting us know on the 4 hour there's going to be some type of an uptrend. So if it breaks the cloud, we still would not be able to get in right here because look, you see this pricing right here? It wouldn't be above previous structure. So you would have to wait for it to go like break the cloud and come like up here.
Is that what those long red lines were on some of the other charts? Like, would you put like a long red line right there to see?
Yeah, like so. Yeah, that's what I do. Yeah, so like I'll look at my little like fractals, which is what these called, and I'll do that to see like structure, like just to do some support and resistance, like just to see. And if I see that it breaks it, then great. But I know that I have to be above here in order for me to get into this.
That's what I'm thinking. So it's like a quick. If you're looking at multiple charts, you put that there. So when you glance back at it later, you know that a twist is coming. You know that you're looking for it to break that red line. That'll tell you it's above structure. And it's good to jump in.
And look at the 1 hour. It's like this right here. When it goes down, these are pullbacks. These are pullbacks. So this lets you know that the market is about to go down, and it did. Look what happened. It dipped. It told you that already. That told you that was going to happen. You see that? Look at the dip.
A slope is a pullback, or what exactly?
Yeah, when you're buying these, like this is a pullback, but guess what? It's about to go up. You see that?
Okay.
It's about to go up. Then there's going to be a little bit of consolidation, a little bit of a gain, consolidation, and then a nice gain.
So it's dangerous to play that game, though. So it's telling you it's about to go up, but is it dangerous to try to hop in for a buy?
It's a 1 hour. So no, it's a 1 hour. So you got to watch the chart a little bit more.
Gotcha.
There's 48 minutes left on this candle right here, and then we'll see what happens. But we already know, look, it's pulling back. If you take this crosshair, look, it's still going to go down a little bit more right here, and then it's going to work its way up.
So that's what I'm saying. Like it would be risky to just like hop in for a buy because you know it's coming, or so if I hop in for a buy and I made my stop loss the bottom of that cloud.
You can do it. You're going to gain pips. I mean, it's going to happen. It's going to happen. It's going to go up. I mean, it's going up. Like there's nothing that we can.
Gotcha.
Like, look, if you look in the 4 hour, it's breaking through. It's telling you that a strong buy is coming in. If you look at the daily now, we're still on a downtrend. But we have this is where we're at. You see this cloud right here? This is what we're, excuse me, no, I'm not. This is where we're at on the daily. So this on a sell, these are pullbacks. You see this right here? It's the opposite. Like it's a little hard to, okay, you see this right here? Like this nice little bump or this hump in this sell cloud? It was a pullback. You see how the market went up and then it went back down? And then you see this like little thing? It's a pullback for a sell. So we are trying to make money off of this pullback. That's what's happening. This pullback is what you're seeing on the 1 hour chart. It's a small opportunity.
Right. Stay away from that for a second because I understood everything into that, and I think I'm just gonna learn the first part of what you taught me.
Yeah, like I like teacups for sells and Ichimoku for buys. But Ichimoku is good for sell too. But like this, remember I told you this was a pullback? You see it?
Mm-hmm.
You see how the market like went down? You see it? Like it's doing exactly what the cloud, it's mimicking the cloud. Look at the cloud structure. Look at the candle structure. Look at it. It's mimicking it. Okay, we had a nice little spike. We're going down. We're going to have a spike. It's going to consolidate, and then it's going to go up. Okay, same thing with this. These little indentations, like when it goes up like that, that's a pullback for a sell. So instead of it going down, it's going to go up a little bit, but then it's going to go down. Then you're going to have some consolidation. So it's going to go down gradually. There's going to be a pullback here. It's going to go down. Like that's what it's telling you. Remember, the cloud predicts 26 periods in advance. Are you there?
Yeah, absolutely.
Okay. The cloud predicts 26 periods in advance. So the cloud is already telling you that, like, it already saw all this. Like, it saw what we're experiencing. So this right here, you haven't experienced it yet, but this is what it's about to happen. There's about to be a nice little buy opportunity. So like, let's just say for now, let's say I go to my app, my investing app, just to double check. Because this is what I do. Like before I jump into anything, I'll check with this just to make sure. Let's see, EURGBP. All right. So right now it's saying it's a strong sell, which it technically is because you see the pullback. Mm-hmm. Look, we have all sell candles. That's what's happening. So I would probably wait until it would go back up. I would wait till this pullback finishes. I don't get into trades this late.
Gotcha. Wait for the cross, huh?
Yeah, I wait. I don't mess with it. Like this one right here, this is something I like. I'm waiting for it. There's 44 minutes left on the candle. I'm waiting for it to cross. I'm waiting for it to go up here. And if I see that it's in the uptrend, I'm getting into it. This one right here, this is a nice one. Okay, bam. So this is perfect. I did not just do that.
Wow.
But you see how support and resistance lines work. Did you see that?
Yeah.
Okay, so like this one right here is a 4-hour chart. All right, we broke the cloud. We have a twist. So if I were to see where we're at right now, and I go here, okay, we're in this candle. We already have a twist. We go 26 periods to the left. We're above previous structure. So now, and that's the 4-hour chart, which is nice. So if I go to the daily, see the daily says that it's in a sell, but this 4-hour is showing you the pullback. So you can profit off of this pullback.
So even though the cross happened, so we've missed the cross, we're late, but you're saying you would still grab some pips?
The cross, no. The cross happened here.
Right.
So it broke the cloud. So even if you would have gotten right away when it broke the cloud, it would have not broken previous structure. Look. If you would have came in on this candle right here, mm-hmm. It would have, like, it's not above previous structure. Look.
Oh, gotcha. So you had to wait anyway.
Yeah. You got to wait a little bit. You want this to be nice and empty. Like, you want no signs of any of that. Like, so if you got in, you're good. I wouldn't go too high. I wouldn't go too high on this one. Let me see the 1 hour. Yeah, the 1 hour is still saying it's going down right now, but it's still in the uptrend. So this is a pullback, like on the daily chart. The overall, remember, this is from January, okay? This is January 17th to now. So for the most part, this pair has been on a sell-based trend, but right now we can make some profits off of a pullback. Do you get it?
Yeah, no, I get it. No, I like it. I get it. This is wonderful.
I love this thing.
This is babe now.
Yeah, no, it's the best thing ever. Like, look at this one right here. Crossover happened, right? We know there's a downtrend coming. It broke the cloud. You go here. All right, let's just see. 26 periods, a twist occurred within 26 periods. It's below previous structure. The pricing is all above the cloud. So if you would have gotten right here on that candle and you would have went to the crossover happened, you would have gained 104 pips on a 4-hour chart. So let me see, this was what day? February 1st, right? Yeah, no, February 1st, all the way to the crossover, which was February 8th. So that would have been a week. So if you would have went for, let's just say, what do we want to do? How many pips do you want to do?
I mean, I like 15 to 20, 40 pips, stuff like that.
All
Well,
right,
it's a 4-hour chart. So you're on a 4-hour chart, probably like, 20 to 40 pips.
Okay, so if you would have gotten in, I don't even know what candle I was on. 20 pips would have been like, yeah, right
In the
there.
first candle still. Awesome. Where's 40?
So 40.
Shortly after it.
Around here where the consolidation happened.
Gotcha. Yeah.
So, like it's just, look at this. The twist, the crossover happens, right?
Mm-hmm.
It broke the cloud. Now, these are the long candles, so, I wouldn't get in on this candle. Maybe this one, but not this long one.
Mm-hmm.
You sit here, you check. Was there a twist? A twist occurred in 26 periods. Is there any pricing in the way of it? No. Like 26 periods, there's no pricing here. It's empty. You could have gone in till the crossover, and that had been 109 pips.
Crazy.
And that was in a matter of 3 days, January 31st to February 2nd.
And your stop loss was the blue line, right?
Your stop loss is the blue line. So if you would have, let me remove my reverse fractals. Hold on. Jessica. So it never hit the stop loss.
Right.
Like even if you would have adjusted to you're in profit, it never hit the blue line until the crossover happened, right before the crossover.
But wait a minute. It's the blue line from at the point when the time you enter, right?
Yeah. So if you would have gone in on this candle, you would have had your stop loss here.
Gotcha.
So that would have been 14 pips, 15 pips. Okay, if you wanted to go up here, it would have been 30. And if you want to go up here, it would have been 50 something. So if you wanted to be safe and go to the cloud and do 35 pips and then wait to see how it goes and adjust it after, you can do that too.
Gotcha. Wow. That's amazing.
This one did a lot of consolidating. It's just like, look. See, even right here, if you would have came in right here, this would have not been good timing because yes, there was a twist, but previous structure is all up in there.
Yeah, makes perfect sense.
Yeah, you just don't, I don't care how good it looks. I don't care if the cloud's saying it's going in an uptrend. You don't take that chance. Because look, a crossover, another crossover happened. So what does that mean? It's a crossover still going in an uptrend. I'll probably take a candle right here. A twist already happened. We already know that. And now it's above previous structure, which is still kind of close. But if you would have gone in on there, you could have won 50, 54 pips.
Gotcha.
Another one, look.
That's the hour chart we're on?
Yeah.
Pretty awesome.
Yep, crossover, broke the cloud, below previous structure. We have a twist. You can get in. Till this happened, that's 30 pips. Okay, if you waited till you got to this. If you, it would have hit your stop loss. So, well, yeah, it would have hit your stop loss. So I like to trade the 4 hour and the daily. It's just what I like to do. So I don't have to check my phone every hour.
Makes sense. So if you trade the 4 hour, what do you go after? TP wise.
Right now, I'm only doing 10 to 25 pips just because I want to I'm focusing on making sure I do entry correct. You know what I mean? Like, entry is very important. So now that I've pretty much mastered entry, I gotta take a chance and do more pips. Like, I have to do that. Look at this right here. You see this? Mm-hmm. This is August 7th. Through, let's see, who would have gotten here. Well, you could have gotten here, yeah. You could have gotten August 7th through September 1st. That's 379 pips. Wow. Which means there's a ton of opportunities in this trade. So if you can't wait all the way till, September, right. You could have got in right here, and in 3 days gained 93 pips.
Like even when you jumped in, that purple line would have been your stop loss, right? From if you jumped in right there, the cloud.
The stop loss. Oh yeah, you can do the cloud, whichever you want to do. I like, so far when I'm doing 10 pips, I haven't needed literally 25 pip stop loss is what I've been doing, and I haven't reached it yet.
Okay.
So the cloud is just so on point. Like it's just, I mean, we're gonna lose trades. That's gonna happen most definitely. Like right now I'm in the negative, but it's gonna go back up. Like it's gonna go up. Like the cloud is, it's going up. It's going up. So I just need to chill. So there's a few that I don't trade, like the ones that you see like this EA is like one trade that everybody gets into. So it moves a lot, like a lot. But I mean, there's money making opportunity.
I love it. We appreciate you. We appreciate you for your time and the training and everything. It's awesome.
Does it make sense? Like honestly, you can stop the recording if you want, because I want to show you something else.
Okay, cool. Yeah, no, it makes perfect sense. I'm going to watch it a couple of times, but it made perfect sense.
Okay. All right, cool. So I want to show you about something.